Forex market has been particularly volatile so far this year, amidst financial worries in some of the world's major economies. But two currencies that have been particularly strong are the Swissy and the yen. Joining me now is Sebastien Galy, a senior FX strategist at Societe Generale, who's based in London. Hi Sebastien, it's been quite a while since we last spoke. Last time we talked about the dollar-yen. Has your perspective changed for this pair in the short, mid and long term?
No, essentially what we expect is dollar-yen stays in a trading range. It's helped on the downside by potential interventions from the MOF BOJ. We have the finance minister, who also became now the prime minister, giving the MOF a bit more power and oomph. The issue is that right now, from a purely tactical point of view, exporters have failed to hedge at better prices. That is, they need dollar-yen to be much higher than it is now. It's not happening. They've been trying to jawbone the currency higher. Of course, traders at one point can be friendly, but they also get, slightly wary of this, and they actually want to see an intervention. So dollar-yen has a bit of a tendency to head lower because people are getting disappointment, and exporters in the month's end will be forced to hedge. So that means there's a bit of downside potential in dollar-yen in a very short term, so one should be not surprised if we get a squeeze lower in that pair. Overall, in the medium term, we still remain mostly in the range trading environment with the potential for a bit of a downside. This will be a function of the mostly the European crisis, as well as how much we're slowing down in Asia. In the very long run, looking ahead at 1 to 1.5 to 2 years from now, then we'll eventually see some form of stabilization of the global economy after tremendous upheavals, one could guess, but it will mean that at one point the Fed will no longer be staying on hold, and there will be expectations from the market that the Fed starts to tighten. And at that point in time, we probably start to see dollar-yen fade a little bit higher.
As we both know, the strength of the Swiss franc continues to take a toll on the Swiss economy. What are your forecasts for the Euro-Swiss franc over the next year?
We are actually expecting more or less some form of active peg coming from the S&B, in the sense that they try to limit any downside in the Euro-Swiss. And there are a lot of speculations regarding the levels, speculation regarding announcements, but essentially the S&B will try to cut the downside. It's starting to hurt the Swiss economy through several factors. The first factor is basically a deflationary shock in the Swiss economy, where the retailers such as Coop, Migros, Manor, and others have cut heavily their prices under political pressure. And that means prices in the Swiss franc are fading very, very fast. I mean, this is not much of a spot trading environment. It's a very risky one. But it's mostly a volatility trading environment that is evolves, particularly in the back end, are very elevated and will generally have a tendency to fade lower because spot simply doesn't move too much. But the main trade is going to be on the rate side. That is basically your borrowing cost, which you should be very careful with. And they will have a tendency to go negative. That means the S&B wants to make speculation in a long Swiss position as expensive as is possible. So it is going to be a yield story. And most spot traders, particularly on the retail side, do not pay enough attention on their funding costs, and that's going to be the big one to look forward to.
And finally, Sebastien, let's move on to the pound dollar. What are your projections for the cable and why?
Well, we do expect sterling to, as the most unloved currency on earth, to outperform. Generally, one reason is everybody hates it, which is always good news because it means it's generally been priced in. It'll be difficult for the UK economy to disappoint more than is currently expected, and euro sterling is staying pretty much in the tight range. We do know that the UK consumer is suffering. We also know that because of oil prices failing, UK consumer will move from despair to less despair simply because oil prices are lower, and that's going to give them a bit of leeway. But the UK government is doing the right thing. It's cleaning up its balance sheet. Of course, it's hurting a lot of people. But in the longer term, this is actually a good story. It also means that the fiscal spending of the UK government are somewhat credible, and that means the gilt market is an attractive market. We do expect sterling to mildly outperform. It will take a while for Australia to basically move sharply up, because for that we need good data coming out of Europe. We're not going to get it. We are entering in a period of about a month where we will have severe shocks in the Eurozone. They are linked basically to negotiations around the EFSF. People like to make noise, they like to make trouble, and that means euro and sterling, because they correlate very strongly, will tend to be very volatile. Once we go through that and some of the data proves decent in Europe, and proves not so bad, then we will eventually move back to our scenarios where the euro survives very well, and eventually people start to consider that the ECB will start tightening. We're not at that point in time. We think we'll be reaching that point either at the end of the year or just at the beginning of next year.
Thanks, Sebastien. That's all we have time for today, but stay tuned for more interviews on Decascopy TV. Goodbye.